Okay, off the lows by quite a bit. The market's in the green, 7 points or so. Let me just quickly take a look at what else is happening in terms of the broader market. Small cap index is down 1/3%. And I'll also quickly refer to the mid cap index. So let me just see what's happening on the mid cap space. It's up 0.14%. So there's no real clear trend outside of the Nifty what's happening. The mid-cap index is higher, small-cap index is slightly lower, and the Nifty is barely in the green, but off the lows, as we've been highlighting. Okay, I think we've got Manisha ready now to take us through what's happening in the commodity space, and we are delving a little deep into the oil and gas space. Manisha, morning.
We are. Thank you so much for that, Prashant. Well, bit of a green on your screen when it comes to the crude oil prices today. Well, it has been very, very volatile week. While on the other side, we have been watching macro where we have seen weak economic data, as you were pointing out. It also has to do with the sell-off in equities, the currencies at play, etc. But on the other side, we finally seem to be looking at the fundamentals right now because we are looking at a decline in the US weekly inventories. The OPEC output cuts have been seen in the month of December. And of course, apart from that, it also has been the oil ministers who have been talking about further review in case of output cuts. Vikas Halan of Moody's now joins us to talk more about that. Vikas, hi, Happy New Year, and thank you so much for joining us today. What has been your sense in case of the crude oil prices? Because we seem to be ending this first week of 2019 in the positive, with US crude up 3%, Brent up 6%. Do you see the volatility continue into the prices?
Hi, Manisha. Yeah, Happy New Year to you, and good to be here. Indeed, the volatility will continue as it has been over, since September. We've always maintained that the market has been overreacting in case of crude oil, be it on the upside as well as now a little bit on the downside, now recovering back again. So the volatility will continue, and there is good reason for it. The market is not yet sure where the supply and demand will land. The supply volatility is still going to be very high. We don't have visibility on OPEC compliance going forward. Russia is a bit of a wild card when it comes to the compliance, because it's the first time they're going to monitor. And then you've got the Iran sanctions coming up for, again, waiver or no waiver. And then we've got U.S. supplies coming in the second half of this year with the infrastructure bottlenecks going away. And demand remains a completely wild card when it comes to economic growth, the impact of the trade dispute. So there are a lot and lots of factors that will play out, and the oil prices will react to all of that, and therefore they will remain volatile.
Oh, well, absolutely. But I understand there's just so much uncertainty and maybe difficult to navigate the prices right now. But what is your near-term, medium-term stance on the crude oil prices now?
We continue to expect the oil prices to be in the range of $50 to $70. And that is something that we expect our oil companies that we rate to use in their budgeting exercise as well, because you definitely have to pinpoint what you are budgeting for. And that's the range where everyone seems to be either around that $60 mark. Some people are at 55, some people are at 65, but within that range we see oil companies are also making their budgets, and we think that's the price of the marginal barrel globally. And with the oilfield services cost increasing in U.S., where we have seen full employment in certain areas where the labor shortages are there, and the rig costs are going up, we would see that the marginal prices will remain firm, possibly increasing a little bit, and therefore the $50 to $70 band over a medium term seems to be quite stable at this stage.
Okay, all right, Manisha as well as Vikas, thanks for joining in and taking us through that conversation. We need to take a break now, but up next...
Sorry, just a quick bit. I just wanted to ask Manisha, is there anything happening on the metal side right now? We were talking about all the slowdown fears, China, etc. Anything happening now, here and now? Because in the morning there was some buoyancy after that.
Well, yes. On Shanghai and LME as well, we did see some buying come back in case of the metal prices. The data, of course, has been on the weaker side, but just bit of that hope from the cakes in numbers that we saw from from China actually has been a bit of a supportive. Yesterday, we saw copper prices decline very sharp, hit an 18-month lows. But today on LME, we've seen a 0.25% gain. Shanghai is a 0.5% up as well. And that is the reaction you can see for the Indian copper prices. Also, almost everything in the green. And this is just one data. Remember, in any case, we have been oversold for metals. The US dollar has been on the weaker side as well. China has been coming out with stimulus. We saw nearly $33 billion for railways being assigned yesterday from China. The details of that are still awaited, but these small measures really seem to be doing their bit.
Okay, well, we had some important commentary which came in from JSW Steel as well, where they expect that steel demand has grown around 3.9% in 2018 despite that global economic slowdown. We'll take a break now, but up next we will discuss the December sales numbers with Bharat Madan, the group CFO at Escorts. That conversation coming up next.